Welcome to the next edition of Perspectives. My name is Rob Pizzichetta, founder of Mont Wealth, and I have another founder on the podcast today, Ben Grabiner, co-founder and partner of Side Stage Ventures. Welcome, Ben.
Hey, Rob.
Now, before I do get started, I'll just start with a general advice disclaimer. Anything we discuss today is general advice only. Anyone acting on this advice without seeking professional or financial help does so entirely at their own risk. So please do your own research or please go and seek financial advice like someone like myself. Now, Ben, can you tell the listeners a little bit about yourself and how you came about to founding Side Stage?
Sure. I grew up in the UK. I moved to Australia about 5 years ago. I was originally the first employee at an early stage venture capital fund in London, and then started a business called Platoon in London, which we ended up selling to Apple 2018. We spent about 3.5 years in Apple between London and the West Coast, moved to Australia in 2021, and was really blown away by the quality of founders and entrepreneurs in Australia. The quality of the companies being built in Australia was really impressive. And yet the VC ecosystem was still relatively nascent compared to the rest of the world. And Side Stage actually started when I met a couple of other successful Australian founders like Alex and Anthony Zakaria, who founded Linktree. And we were all started angel investing in early stage startups. And I said, in the UK, in the US, you have these awesome founder syndicates where you have groups of founders come together to back other founders. And it's a beautiful symbiotic relationship because founders early on their journey appreciate the support of people further along. And people further along who have built businesses want to support the next generation, but also are pretty good generally at understanding the traits that it takes to build a big business. And so we started Side Stage by just formalizing that syndicate. We started with 4 or 5 founders investing deal by deal in other early stage companies coming out of Australia. We spent about 12 months doing that, went really well, had about 100 investors investing alongside us. In 2023, we decided to turn that into a proper early stage fund, which is where Side Stage is now.
Fantastic. Now, for those that are new to investing in venture capital, what is it and how's it different to buying shares and property?
Yeah, early stage venture capital is really investing in private companies with high growth potential early on in their life. So it is a high risk, high reward strategy. Generally, some of the biggest companies in the world started off with venture capitalists putting money in early on in their journey, and some of them have been very successful. It's got a different kind of risk profile to at least single asset investments, got a different risk profile to, say, property, public markets, but it gives you exposure to some of the transformational moments of our lifetimes. Some of the biggest winners in the era of web and mobile and probably now AI are those that are able to back the early stage fast growth companies early on in their life.
Yeah, and I'm sure every company wouldn't start as a public company. So to give investors an opportunity to get in before it gets on this ASX or the NASDAQ, whatever it might be, that's exactly what you said.
Yeah, particularly if you think about something like AI, which I think it's not particularly insightful to say that it is a kind of generational transformation that we're living through, and it's a huge amount is going to change. If you want exposure to that transformation, arguably the kind of most transformational moment of my lifetime, it's actually really hard to do that in the public markets. And what the private markets, and particularly venture capital, enable you to do is to invest in some of these companies before they go public.
There are different stages of venture capital or unlisted markets, depending on the life cycle of the business. Did you want to explain a little bit about that as well and where you sit on the investment sleeve?
Yeah, look, I think it's pretty straightforward. You have early stage, breakout stage, and late stage, but they're all fluid. Where we see the most opportunity is in between pre-seed and Series A generally, and that's where we're investing very early on, often with 1 or 2 people. Sometimes there's a product that we can use. Sometimes it's before product. And really we're investing in exceptional people who can build really big businesses. That's where we see the biggest opportunity. There are others that will invest later on at Series A plus. And as you go later on, arguably you're reducing the risk somewhat. So obviously, actually, a lot of these companies are quite high risk as they go up. But what you get is we're often investing at a $10 million I'd say valuation, sometimes less. If these companies succeed, you get quite meaningful returns off the back of that.
You said something interesting just then about investing in people, and even sometimes even before revenue and even before product. So what learnings have you taken from your past experience to identify these opportunities and these people that have got these great ideas?
Yeah. So we have built a language really for describing the sorts of traits that we to see in founders. And there is a certain amount of repeatability. Founders that have been there and done that, if they've built one or two successful companies, that probably doesn't guarantee you success, but it probably increases the chance of success in the next business. We value very much bias to traction. We call it speed of execution is super important. So it may be early on in the company's life, but the speed at which they are executing and shipping product is really important. We look at spikiness. Or spikiness is really, what is the founder's edge? What are they the best in the world at? Often founders are not really great generalists who are good at everything, but it may be really good at one particular thing in a particular area because of their kind of experience. And we think that's really valuable. So that's a few things. That's the kind of three of the things that we will look for. But it also is about who's got the kind of hunger and ambition and drive to build a really big business, because we're not part of what venture capital is about. It's about backing founders that can build really big businesses. Like it's about creating outliers. We want to be investing in the next Canvas or Atlassians of the world. And to build those businesses, it takes real ambition and real drive over a fairly long period of time.
Yeah, understood. And I know you focused specifically on Australian market, VC market. Can you talk a little bit about, I think really people underestimate is the potential in Australia with VC and early stage investments. Can you talk a little bit around that and give us some stats around that as well, please?
Sure. So when I first came here, I was a bit confused. I was like, there's something going on here, but it wasn't clear. A couple of months ago, we built a report on it. And there are a few really interesting things. Australia has got the second fastest growing tech ecosystem over the past 5 years behind India. But more than that, it's got the highest number of unicorns per dollar invested of anywhere in the world, which is wild. And a lot of it's down to there's only been $35 billion of venture capital deployed in Australia over the past 25 years versus the UK, which has had $200 billion. If you're looking for undervalued opportunities, actually Australia is a really interesting place to invest, because every dollar you invest here has got more chance of building $1 billion company than anywhere else. The other thing that's interesting is that is obviously adjusted for dollars invested, but on a kind of purely gross basis, we're looking at outliers. Like venture is about building outliers, really big companies. And Australia has built 6 $10 billion plus businesses, despite, and that is on a par with Israel, who has had 6, India that's had 7, the UK has had 10. But all of these other countries that had similar number of really big outcomes have had 5, 6, 7, 8, 10 times as much capital deployed over the past 25 years. Even on a gross basis, even not adjusted for dollars invested, Australia is really punching above its weight in terms of exceptional technology companies. We think there's a kind of really undervalued opportunity.
And where do these great ideas come from? Is it research? Is it university? Is it just people that have gone to the US or Europe and found an idea and just come and exploited it?
Yeah, the truth is there's not really any great ideas anymore. It's not really about the ideas. It's very rare that you will back a company that has got a truly novel or unique idea that someone else in the world is not trying to do. What is important is having the quality of entrepreneurs that can build it. And Australia has got, I think, firstly, talent is evenly distributed. There's no reason why there's more talent in the US than there is elsewhere. So Australia's got its fair share of very talented, high quality entrepreneurs, but also it's got a very good education system, like 3 universities in the top 20. It's got a pretty friendly regulatory environment. It's a great place to live and build businesses. It has as much chance as anywhere else at building great companies, and has for some reason punched above its weight. There is something about Australia which is quite similar to some of the Scandinavian countries in Europe, like Sweden and Estonia particularly, whereby the best companies in Australia are built global from day one. You don't look to it. Australia is obviously a small market on a global basis. And so the best companies here that many of your listeners would have heard of Canvas and the Atlassians, these are companies that have sold from day one to a global customer base. The best startups here are building in Australia and selling to the US, honestly, whereby you can build in Australia, the cost of labor is lower, but very high quality in Australian dollars. And if you sell to a US market, you have a really interesting arbitrage opportunity, particularly on talent. There's a whole bunch of ways that have created a really good environment to build startups in Australia.
Fantastic. Now, I know that you've backed a few startups already here in Australia that have actually been quite successful.
I can talk about one of the companies in our portfolio, which was a company called Leonardo AI. So Leonardo used artificial intelligence to do image generation, and we met them early 2023. They had a small team. They had just launched the product about 6 weeks prior, had no revenue, but had a fast growing community. And we were really blown away by the product, but also the speed of one of the things I mentioned to you before was speed of execution of the team, and the speed at which the team were able to operate and build and ship was super impressive. So we invested in them. Then they continued to build. We then invested in them again at their Series A round, where they raised some capital, local and also overseas VCs. And then in July 2024, they were actually acquired by Canva. And now the team there are a big part of JJ, the founder there. It helps run the artificial intelligence wing of Canva. And our fund now has a pretty significant amount of Canva shares in it, which is doing well. A really brilliant AI software team coming out of Australia, being built in Australia by a world-class team. And they happened to be acquired, but they chose to join forces with Canva because of the amazing potential that created for both companies. But they could have been a really big independent business too. That's one of the companies. You want me to mention any others, or?
It's fine. Sure, there would be instances where things take a lot longer to play out, or they might not even be successful. So there are examples of that as well.
Yeah, look, in a fund, we have 25 investments in a fund. And so you expect that several of them won't work out. And typically your returns are driven by the handful of investments that work out really well. And that's why for many, it's the benefit of investing in a fund means that you get exposure to a portfolio of companies rather than just individual assets, because it is quite hard it's a full-time professional job to find and source the best opportunities. And it's actually really important, because venture is about outliers. It's really important that you're able to access the best opportunities, because if you access a whole lot of opportunities that are not the best opportunities, then you can't drive good returns. And it's all, the other side of this is that it's the one asset class that picks the investor as much as the investor picks them. So your property and your Tesla shares don't pick you, but the startup that we back pick us. And so you have to be able to have at least a brand and a reputation that is attractive to founders to want you on their cap table, and to the best founders to want you on their cap table. So a lot of these things mean that it is even angel investors, you need to spend a lot of time to find and attract the right opportunities. And so one of the nice things about a fund is it gives you exposure to a whole bunch of those opportunities and de-risks it somewhat because you have a portfolio.
Do you have a sense of how many investment opportunities you would look at
We look at about 1,000 opportunities a year, and we'll invest in about 10 of them. So we invest in about 1% of the opportunities that we come across.
Okay, so obviously that 1% must be that must be a really outlier in effect, and the people must be very strong and have a great strategy and potential there. The next question then for you would be, all right, so we've done the screening, we've done the 1% of investment. Then for the investor who gets into the fund, what should they be expecting from the side stage guys? Do you take a seat at the table on the board? Do you advise? What role do you play to assist?
Yeah, so we typically don't take board seats. There's a couple of things that almost all the founders that we back need help with. One is fundraising and the other is hiring. So we lean into those two things particularly. We'll sit down at the beginning and we have a kickoff meeting with the companies that we've invested in. We go through their plans for the next 18 months, their milestones, their commercial milestones, their product milestones, and we will examine where side stage can help, and different companies need support with different things. So some need help with customer introductions, some need help with PR, some need help with overseas expansion. Some needs help with like engagement with certain stakeholders. And so each company we invest in a whole bunch of different companies in different sectors, and so have slightly different needs. Probably the most valuable thing that we provide founders is a really safe space. We care very deeply about this because we have all been founders and we've all built businesses, and it's really hard building early stage businesses. And there are high highs and there are low lows, and it's never a straight line journey to success. It's very rare. And so what we care most about is creating a very safe space whereby we measure ourselves not just on being the first call when good stuff happens, but also when bad stuff happens, because founders like to rely on us as the way we help is when founder calls and says something bad happened, and we can normally help because as a group, we have been through pretty much everything. We've succeeded, we've failed, we've sold companies, we've listed companies, we've bought companies, we've fired people, we've hired people. We've been through all of that. And often, even first and second time founders, they really value that kind of raw and trusted support when they hit a stumbling block. And that is probably pretty unique to us because of our experience of building companies. And that's probably the thing that founders most value when they come to us.
Okay. And from the investor's perspective, what should they be expecting for an investment inside stage?
What should they be expecting? Look, we are, as a fund, we have a 10-year life. We target a 3 to 5x, kind of 25% IRR plus. What you get with us is you get access to the companies we're investing in. You get access to co-invest alongside us if you want. I think the other thing that's worth noting is for Australian investors, it's a pretty tax effective structure because you should take tax advice, but you don't pay capital gains on the upside. So actually doing a 3 to 5x on an Australian ESVCLP fund is equivalent to doing 5 to 8x or something in that region on a non-ESVCLP fund because of the kind of tax benefits. But really, what you really get is access to some of the best fast-growing early-stage tech companies in Australia.
And then finally, Ben, for those listeners that would like to learn more about SideStage, where would they get some information?
They should reach out. They can find me, Ben Grabiner, on LinkedIn. They should ping me and we'd be happy to have a chat.
Great. I'll put your details on our show notes on both YouTube and the podcast. Thank you so much for your time and have a good day.
Thanks for having me.
Yeah.